and the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
That we're seeing some bit of a rise coming in for Hang Seng and Taiwan Index, which are managing to hold on to good gains.
Asia ex Japan, we've lagged now for the fourth straight month.
It's been an outperformer, but it's still, if you look at it in the last 10 months or so, it's still not at those highs that we saw. So that's one name I'll keep an eye on.
24,474 is where the Nifty is at. 53,824 is where the sensex is at.
Now you need a very clear thinking about how to invest. I mean, in investment candidates, what all you are looking for.
Last month was nothing great in terms of the moves that we saw. In fact, it was the biggest weekly fall in 5 months that we saw last week. So some of those gains have come back.
कांग्रेस को जल्द से जल्द खत्म करने और स्थायी शांति स्थापित करने का रास्ता खोजना होगा.
The Indian Prime Minister Narendra Modi had a 55-minute-long meeting with President Xi. It's still quite a bit of a distance away from where things currently stand, but 24,600 on the index for now.
Well, what a strong day so far it's been. 24,600 in the Nifty, 500 points up on the Sensex. We're at the day's high. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima, with me, Surbhi and Nigel. Hi, guys. It's only been getting... Yeah.
After a long time, actually. And the gains have been held on today, so that's a good thing as well.
It's actually just getting stronger.
Oh, that's right. Getting into the last hour of trade at the high point of the day, that's looking good. And maybe some of those FIs are on vacation, right? Because the US markets are shut today. So that could be one factor at play as well. And tomorrow you'll have the weekly expiry playing out for the Nifty, which is the first one that will play out on Tuesday. So as things stand, some of those bears will getting a little jittery because the markets are gradually moving towards at 24,650, and the options data suggested that that's the mark they would like to protect. So let's see how this one goes.
Absolutely. And it's green across the board. It's also green in the broader markets. Yeah. There's a lot of buoyancy in stocks, and we haven't seen that in a long, long time. So it's good going. Obviously, the auto sector is leading from the front thanks to all the excitement around the GST cuts and also sales numbers, actually, which have been mostly positive and slightly better than subdued estimates. So that's what's working out quite well. Let's quickly tell you what we're covering on the show. Well, a strong day of trade on the street. The Nifty has been surging to levels of 24,600. Auto sector taking the lead. Broader market is showing a lot of outperformance as well. In fact, we'll be putting the spotlight on the auto space as those sales numbers have come in for the month gone by, and a special spark coming in electric two-wheeler stocks like Ola Electric as well as Ather Energy. So what's the buzz? We'll tell you all about it. Zydus Wellness is one of the top buzzes today. This is after making a small acquisition. Again, that's a stock on our radar, and we'll discuss it as we go forward.
Okay, let's take stock of some of the big movers on the large cap screen. Well, it's auto all the way. Eicher Motors is up nearly about 3%. Bajaj Auto, 5% jump in the monthly sales numbers. M&M, Hero MotoCorp, and now even Tata Motors, where the numbers are out. In fact, the top 5 Nifty gainers belong to the auto space. After that, you've got a Trent and Eternal, so throw in some consumer. That continues to remain upbeat. And IT too is holding up quite well. Infosys and Tech Mahindra on the buyer's list. How should you position yourself in the last... Okay, we'll get to the technical strategies. Dipan Mehta is joining in. Dipan, finally a good day. Look at the Midcap index, 1,000 point up. What have you been doing? Have you been buying? And what are your thoughts?
Yeah, Rima, good afternoon, and thank you for having me on your show. I think about time that we are seeing a pullback in stocks, and I think the kind of moves made by the government, and especially expectation of positive announcement for GST and the outcome of the overseas trips of Prime Minister Narendra Modi, that have lifted the sentiment over here, which is why we are seeing this kind of a current in some of the stocks. And also, I think easing of imports from China, so that entire China-related businesses, be it electric two-wheelers, or EMS manufacturing companies like Dixon, Amber, they are all in focus because there were certain challenges over there in terms of procuring raw material or getting investment from Chinese company, and that may get eased after this particular meeting that Prime Minister Modi had with his counterpart in China. So it generally lifted the sentiment. And as far as the second question, what we have been doing, I think we are pretty much, remaining more or less fully invested and looking for good stock ideas. This particular earnings season has not been that great, and there are fewer ideas than when we entered in it. But nonetheless, I think we're looking for domestic-oriented businesses which benefit from GST cuts.
Do you have any on your watch list?
I think retail is top of the mind, especially two companies come to mind, Vishal Retail and V2, Vishal Mega Mart and V2. Both companies came with very impressive set of numbers, and they are also in tier 2, tier 3, so they will benefit from GST cut and improve rural spendings as well. So that's then the entire jewelry pack, I think they did very well, right from Titan, Kalyan, Senco, all of those companies reported good numbers. And I think if gold prices kind of stabilize, these companies are looking at growing pretty well over the next few years, also expanding their network as well. And they're not really affected by Trump tariffs. So you have to look for domestic focused jewelry companies. That also is in line with this consumption oriented investment theme. And then there is these travel and tourism companies, especially Indigo, now that the stock overhang is almost done with. And we feel that this festive season will be exceptionally good for airline companies, especially Indigo. And then there's an online travel agency called Yatra, recent listing. That also did very well in the last quarter. So that's also on our watch list. So that's what we're looking at right now. But Rima, all these companies I spoke about, all their names, we and our clients are invested in them or looking to invest as a measure of disclosure. So our views could be biased.
Look at Yatra, 63% up this month. And the other one, Vishal Mega Mart, 5 consecutive quarters of a double-digit same-store sales growth. So it's managed to buck the overall weakness in consumption. But how, Dipan, do stay on. We've got Ashish Kyal also joining in for some last hour trades. Ashish, morning. Have you been playing on the upside? What would the call be?
Hi, afternoon to you and all the viewers as well. See, if you look at the overall broader market, I think it's trying to find the direction. Last week we closed near the lower end of the range. We are trying to bounce back again from there. So I think as long as 24,400 is intact, there can be some consolidation. But stock-specific action has continued within this range. If I talk about the stock, then the first stock that is on the buy side is going to be RBL Bank. We can clearly see a very strong outperformance from RBL Bank. We can see that the stock has managed to show more than 1% of gain in today's session also, and it's consolidating. So there is a possibility we can see a move towards the level of around 275 on the upside. On the downside, one can maintain a stop loss on the stock at around 258 levels. And the next stock on the buy side is also going to be Bajaj Auto. We can clearly see the two-wheeler segment has started buzzing over past few weeks, and Bajaj Auto is just trying to catch up. It has been a lot of travel to do on the upside because we can clearly see the outperformance from TVS Motors and Hero MotoCorp, but Bajaj Auto is yet to get there. So one can create long positions in Bajaj Auto as well, expecting a target on the upside at around 9,700. On the downside, one can maintain a stop loss for the stock at 8,600 levels.
Okay, all right, Ashish, got that. Thank you very much for the trading calls. We'll come back to you in a bit. Let's actually talk about the auto stocks, which are absolutely electrified, as we've been saying as well. We have Sud joining in, and Ola and Ather both have become a study in themselves because stocks have been up and away. Ola is up some 40% in the last few weeks. It's up, in double digits again today. And then there is Ather. Ather, of course, posted some good numbers as well. That's Ola, 14% higher. Let's pull up Ather. Okay, so it's cooled off now. It started the day on a more buoyant note. But so tell us, what's suddenly electrifying these two-wheeler EV stocks of late?
So what a move both these stocks have been seeing for the last few days, especially Ola Electric. The day, if you remember, China had announced that they are going to lift the curb on rare earth magnet. That was the first day that we had seen a big move in Ola Electric. It has continued from 52-week low. The stock is up almost 54%, and it's up 50% in last 1 month. So what's the news? Major announcements over the last few weeks, or say over the last few months. So as far as August Vahan registration data is concerned, Ola Electric has reclaimed #2 spot, leaving behind Bajaj Auto and all the other companies. TVS remains at #1 position. Now Q1 earnings company had seen a sequential improvement. And also it has said that going forward, earnings are expected to improve. And recently it has announced that Gen 3 scooter has secured PLI certification. It's very important because Gen 3 scooter forms nearly 60% of its total volumes. And now it believes that it's going to impact PLI incentives positively in the range of 13 to 18% of total sales value. That would remain until FY28. And it's also going to boost profitability in Q2. Especially talking about auto business margin, company expects auto business margin to turn EBITDA positive in Q2. And in FY26, auto business EBITDA margin is going to be 5% or more than that. Also, recently China has announced that they are going to lift the curbs, and that also helped the momentum continue, positive momentum continue. Now coming to Ather Energy. Company got listed in May of 2025, and from listing price, stock is up 51%. And from the lows that had hit of 288 per share, from that level, stock is up 72%. Some of the announcements: August registrations, company has seen an improvement on a sequential basis. It's the highest registration in a month that company has seen so far. For Ather Energy also, Q1 earnings had seen a sequential improvement. Now, over the weekend, company has announced certain announcements. It has announced new platform, that is EL, and it believes that it's going to help in improvement in margin over the next few years. Now, on the market share, company saying 20% overall market share is very much on the horizon. Especially talking about the South India, company already is leading the chart. It has the highest market share amongst all the electric two-wheelers. Now, on the pricing front, everyone was talking that like so many companies have been launching products that would price below rupees 1 lakh, but company is saying that it's not going to play that part. Its prices of products will remain above rupees 1 lakh. And also on the brokerage front, all the brokerages have a buy call and highest target price is 480. But today it has crossed that target price also, and the high it had hit was 496. Just on one thing on valuations, Ola FY26 price to sales is 6.5 times versus Ather's 5.8 times. So what does it suggest? It suggests that market is expecting higher growth or better profitability potential from Ola versus Ather going forward, or say in FY26.
It's really interesting how the market's view on Ola Electric suddenly seems to be transforming. So we'll come back to you in a bit because we have to discuss the monthly sales numbers as well. But I just want to highlight for our viewers, let's pull up the intraday chart on the Ather Energy. Earlier we had fired Ather Industries, which is not the stock we're referring to. It is Ather Energy, and it continues to be absolutely electrified with a gain of about 9% right now. Dipan, hi, good afternoon. What a move on these stocks, right? And what a turnaround in sentiment on Ola. First of all, it seemed like Ola could do no right when it came to investors in the stock market. And now suddenly, when last 1 month, I mean, are you convinced about these, the so-called turnaround, the increase in the registration numbers? And what would your advice be on both the stocks?
Well, I think that we are just watching these companies, not looking at investing in them. And especially Ola Electric, the losses are quite incredible. And let us see the roadmap to profitability because they are making losses even at operating levels. So let's see where the break-even point comes for these companies as well. So I would just wait and watch. And it's not that they have a monopolistic position. See, unlike some of the new age businesses like say Swiggy or Zomato, they are duopolies, or some of the other platform companies have a very strong moat. But the likes of Ather and Ola Electric are also competing with traditional, the old automobile companies, the likes of say Bajaj Auto or TVS Motor or Hero Motorcorp. Of course, Hero has a stake in Ather. So from that point of view, I think the kind of challenge for them to grow and turn profitable is even more difficult. So I would not invest in these companies at this point of time. But yes, I think if they pull a rabbit out of the hat and suddenly show profitability and road to sustained growth, then we may change our view.
Okay, for now, you're giving it a pass. Sudarshan is still with us. And now let's talk about the August auto sales numbers. And just, Sudarshan, going by the price action that we're seeing, Bajaj up 4%, the others up 2.5%, 3%. Numbers are good?
Numbers are very good. Most of the companies have reported sales for the month of August, and all numbers are looking much better than estimates. So we'll start with Bajaj Auto. It was the first company to report the numbers. Total sales have increased by 5%, has come at 4.17 lakh units versus our expectation of 4 lakh units. And good part is domestic sales, though, have slipped, but numbers are largely in line with estimates, and both exports and three-wheeler segments continue to do well. Next is TVS Motor. It was a beat across the segments, except electric vehicle. All the segments segments have seen a double-digit growth. Total sales were up 30% YY versus our expectation of an increase of 11%. Domestic two-wheeler sales were up 28%, and similar move was seen in motorcycle also. It was up 30% YY. For Eicher Motors, company's growth over margin thesis continues to play out. Even in the month of August, total sales have come at 1.14 lakh units. That was up 55% YOY. Even export segment continues to do well, and that also has increased by 39%. For Mahindra & Mahindra, M&M Auto segment, after several months, sales have come below our estimates, and there is a reason to it. So, auto segment sales were at 75,901 units versus our expectation of 79,167 units. Company is saying that ahead of GST cut, that is the expectation, it has reduced the inventory, and that's so the decision was taken to reduce the billing because that GST Council is going to approve the GST, and after that, company will look to increase the inventory again ahead of the festive season. But as far as the tractor segment is concerned, it has done much better against estimates. Total sales were up 28%. It has come at 28,117 units. For Tata Motors, contrary to Mahindra & Mahindra, Tata Motors, after several months, numbers have come better than estimates, and it was led by CV segment. Both bus and truck segments have done well, and total CV sales were up 10% YY. Also, electric vehicle segment has seen a growth of 44%, while total PV sales have seen a decline of 3%. Escorts Kubota sales were better than estimate. Total sales were up 27% YY and 7% higher than estimate. Both domestic and export segments have seen a double-digit growth. Ashok Leyland also sales were better than estimate. Total sales have come at 15,239 units versus our expectation of 14,967 units, and total sales were up 5% YY. So ahead of festive season and ahead of GST announcement, these companies have announced wholesales for the month of August, and one line, sales were much better than estimates.
Okay, all right, sir. It's been a busy day for you. The engines are firing all cylinders. Dipan, what's your view? Well, what would you like to hop on to? An ICE vehicle or an EV? And within that, will it be a two-wheeler or a four-wheeler? What do you like?
I think, Nigel, that two-wheeler companies should do well. And monsoons have been good. GST cut, lower interest rates, reduced cost of ownership, stable petrol prices, especially entry-level two-wheeler companies like Hero MotoCorp. I think we've been quite bearish on that company for a long time. But risk return profile is very positive for Hero MotoCorp. It's amongst the cheaper of the two-wheeler companies. Again, it is focused on mass market, large rural presence as well. And it's been a laggard, it's been losing market share. So I'm pretty certain that you could have a good trading rally in Hero MotoCorp, and it may turn out to be an outperformer within the two-wheeler space. Of course, from long-term perspective, our favorite stock, Eicher Motors, but won't talk too much about it. And very impressed with Mahindra & Mahindra's numbers. I think it's going from strength to strength. And I think that as we have done, M&M could be part of a core holding of investors. Having said that, all of these companies, we and our clients have investment or interest.
Okay, all right. Deepan, I wanted to ask you about a few more names. IMFA, that's Indian Metal and Ferroalloys. I'm not sure whether you track that one, but clean balance sheet, they are backward integrated. And ferrochrome prices have moved to the highest that we've seen in the last 9 months. Now, that stock in the last 1 month, I think it's up close to 17-18%. In fact, that was a stock to watch that we had spoken about this morning, in our morning chat. Any view on this name?
No, Nigel, I'll give it a pass. But, it's a nice cyclical company, and I'm sure if the prospects are looking up, then there could be a good trading rally in it.
Indeed. What works for them is that they're backward integrated. Chrome ore prices globally have been moving up. They get their chrome ore from their own backyard. So they benefit when ferrochrome prices move up. Clean balance sheet and capacity moving up. I think that's what the street likes on that one. Any view on the refiners? Some of these refining companies, MRPL, CPCL, I don't know whether you can put Manali Petro on that as well. These companies saw a big correction from the recent peak. But particularly on the core refiners, you have the GRMs that are holding up. Any view on these names, or there's too many moving parts? What's going to happen with regard to import of Russian oil? Refining capacity itself is, sharply lower globally. So that's what could help GRMs. Your view?
I think if you want to play the energy companies, go for BPHP. If you have the faith that the market will re-rate their earnings. We don't have that confidence in the market to re-rate the earnings, the P multiple, the valuation multiples for BP, HP, IOC. But there are some investors who feel otherwise, and I'm sure it may work out as well. And these companies, I think PSUs are the flavor of the market, and these companies really have been laggards. A lot of other PSU companies, including PSU banks, have seen their P getting re-rated, but not the case with BP, HP, and IOC. So maybe that may also happen over there. And in a market like this, where so many stocks are so expensive, I think low PE stocks certainly will get the attention. So if you want to play this particular high GRMs or the petroleum sector, I would say the best plays are HP, BP, and IOC. But end of the day, I think these companies are good trading bets. I'm not sure you can hold them for 3 to 5 year kind of a perspective.
Okay.
Okay, Dipan, we'll leave the conversation here for now. Thank you very much for joining in. As we slip into a break, here is a quick reminder for all our viewers. Unlock a world of exclusivity, expertise, and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with the journalists, along with curated studio tours, e-learning sessions, masterclasses, and curated lifestyle benefits.
Welcome back. Well, the markets are holding with good gains, 190 points up. I think the only problem is the Nifty Bank. You know, the Nifty Bank can get its act together, then these markets will feel that they can move towards the 20 DMA, because as of now, even if you look at it for today, the Nifty Bank is up only 0.5%, while the Nifty is up 0.8%. That said, let's hop across to Hormuz, because there's plenty of action in the broader markets. As always, he's turning the spotlight on all the top movers in the market. Hormuz, take it away.
There's some interesting names that have come in, whether it be on the non-index front as well from the broader markets, and Huhtamaki India is one such name. This is the biggest single day again that the stock has seen since March of this year, and this 6.5% move has come on more than 6 lakh shares changing hands compared to a 20-day average of just 55,000 shares. Now, at this price, the stock has gone above its 200-day moving average, which is at 224. And despite this move, the stock is still down 15% on a year-to-date basis. A stock that is flying away today is MobiKwik, and the stock has seen its biggest single-day gain since March of this year, the 7% move. It's significantly off the highs. At one point was up almost 14-15%, but 2.5 crore shares already changing hands compared to a 20-day average of 7.5 lakh shares. And despite this move, the stock is well below its IPO price of 278 and still almost 65 to 70% below its post-listing high, which is close to 700 rupees a share. Now, Optimus Infra is another name doing well today, and this 7% move is after snapping a 6-day losing streak. 14 lakh shares changing hands compared to a 20-day average of just 1.5 lakh. It's broken above its 100-day moving average today, and the next important level on the upside is the 200-day moving average, which is coming up to around 591. But despite this move, the stock is still down on a year-to-date basis, but the stock had doubled in 2024 with gains of around 124%. And lastly, JTL Industries, the stock, if you look at the volume chart, has seen a very sharp surge in volumes after 1 p.m. And if you take a look at the moves as well, the stock is gaining on high volumes, but is declining on low volumes. Now, before today's move, the stock had declined for 4 days in a row, and today's session has already had 51 lakh shares change hands compared to a 20-day average of 12 lakh shares, while during that 4-day losing streak, the average trading volume was just 16 lakh shares. The stock has now gone above its 50 and 100-day moving average, and the next important level on the upside is around 83 rupees, which is the 200-day moving average. Back to you guys.
Okay, all right. Thanks very much, Hormuz, for the updates there and all the buzzing stocks. Let's quickly welcome in our next guest. Aman Chowhan, fund manager at Abacus Asset Manager, is with us. Aman, good to have you on. And you come in at a good time because the market finally seems to be getting some sort of a breather, some sort of a relief, and we have green on the screen. But what have you made of the way things are? And Aman, any changes in the portfolio, any new ideas? Because in this period of consolidation, stock prices have been fairly stagnant, while all the news and the noise has been coming through. So just tell us, what's new and what have you been up to last few weeks?
Frankly, last few weeks, nothing much. The sectoral preferences remain the same for us. So while the banking sector has not done well because we expect in the next 2 to 3 months it might stay stagnant because of the impact of the rate cut, but then the benefits of that will start coming in. So over the next 12 months, the sector still looks good. Preference for NBFCs stays. The larger NBFCs is in the, you can say, in our portfolio. We are getting more incrementally positive on pharma, just waiting for the tariff clarities to come in. Otherwise, that is one sector that is now looking good. Chemicals is one that is on the, you can say, radar to increase our exposure. Yeah, so that's predominantly what it is. Consumers has been the buzzword, especially once the GST numbers get announced and of late what the government focus has been. But within that, not many names which fit in the valuation criteria. So still not in the portfolio, though it's looking good incrementally because the monsoons are happening also good, but not yet in the portfolio.
So there is no consumption stock, or if you have any consumption stocks, if you could just tell us, Aman. Hi.
Hi. I can't share names, but yeah, we have consumption names, consumer discretionary especially, but it's not a heavy exposure for us. This will be like low single digit kind of exposure for us.
Okay. What about IT? There is a possibility, I mean, there is one view that once the Fed rate cuts start playing out, there is potential for IT re-rating. Anyway, IT has underperformed. Would you be in that camp, or do you think this overall downbeat earnings growth will keep a lid on IT stocks?
I think there's a trading pop that can happen in once the rate cut happens or once the tariff clarity comes in. But beyond that, IT is going to be, especially the large movers, because the growth rate is still going to be single digit, and hence I expect the returns also to be single digit. So not much of a, you can say, excitement for us that way. We would prefer more of platform companies, more of companies which have a differentiated business model, or maybe something in the mid and the small cap space, than looking at the larger cap ITs, because the growth rate there, because of the high base, is pretty low.
Hi, Aman. Good to see you. And Aman, let's talk about the sector of the day, which is autos. How are you all approaching this theme? What do you like? You know, the two-wheelers, four-wheelers, CVs, what is on your radar? What about the EVs? You know, you have Ola Electric at 40 rupees. No one is interested. 50%, you know, it's given you in a very, very rapid time frame. Yeah. And now people are talking about higher levels. What do you like? I mean, particularly on the EVs, if you could comment first, and autos on the whole, how are you approaching it?
So EVs definitely is looking interesting, both two-wheelers as well as four-wheelers. So we have small exposure in the four-wheeler EV segment, nothing much on the two-wheeler. The companies that you mentioned are buzzing, especially there is some liquidity there. I think there was a large PE seller in Ola, and that selling is over, and now people are back looking at these names. And overall, today has been a new age company day. Most of the sectors of platform companies or the new age companies are buzzing today. And I think that has helped Ola also and other companies also. From the portfolio perspective, it's looking good, but we are not yet in the portfolio, except for that four-wheeler exposure that we have. But I'm sure we all know about this. These companies are going to gain market share. It's just a matter of timing and the valuation. So what price do you want to pay, and how long is your investment horizon? Otherwise, these companies are the future, and they should be part of the portfolio.
Four-wheeler player is the one that has exposure to Europe, or the domestic one that has tractor exposure?
Domestic.
The domestic one. Okay, all right. So Mahindra would be the name that we're looking at with regard to the four-wheeler play out here. But what about these new age themes? You know, Mobiwick as well. You know, that one no one was looking at today. Suddenly that one's up 8% move on that name. Paytm has come out of nowhere. Ola Electric. You know, some of these themes that actually on listing there was not too much excitement for the next few months as well. They bid a lot of time, but now suddenly, you know, these stocks are doing well. One thought Paytm did its move at around 900. It's more than 1200 rupees today.
Yeah, so in the near term could be technical factors, as I mentioned. Today's the day all these companies are, but overall I feel there could be a move that people are moving from traditional IT services exposure and getting into these companies, right, where the growth rate is high. Valuations are definitely high, but at least the growth rate is much more exciting than your traditional IT services companies. So that could be one reason. And overall, there is sector rotation every month. Every month there is some flavor, there is some buzz in sector, and looks like these new age companies are in the limelight in the current month. Otherwise, specifically, I don't see any major reason as to why the price moves today specifically.
Okay. Aman, from the whole consumption space, which is where there's so much excitement, of course, we've discussed autos, but otherwise broader consumption, given that, the GST cuts are the next big watch point, is there anything that you would add to the portfolio on a more durable basis than just a bit of a short-term pop? I mean, do you see something structurally, materially changing? And if yes, in which part of consumption?
See, demand definitely is picking up for all the initiatives the government has taken, plus monsoons have been good. So the rural demand is also picking up. So consumer discretionary, say household items, small home appliances, those items, fans, these are segments that is looking good. In the building material space, this has been a laggard for almost 2.5 years now. Well, real estate number of flats sold have been rising every quarter, but the ancillary, the tiles and the pipes and the plywoods and the MDFs and the laminates and all these companies, they're being struggling on the demand. So things can move up there. So if people are going to spend, they're also going to spend on renovating the homes, maybe spending more while buying a home. So this segment looks good. It has lagged for more than 2 years now, and it's seeing first signs of bottoming up. We are seeing volume picking up in the last few months, and this can give a good, meaningful 2-3 year investment horizon and a decent return.
What about these electronic manufacturing companies like Kaynes, Dixon? Very excited today, Sirma. Up, we're seeing gains between 5-7%. They were massive wealth creators, but in the last 1 month, again, like the rest of the markets, we did see some gains being shaved off. Stock prices didn't do too much. Have they moderated to levels which make the valuations attractive enough to invest for the next 2 to 3 years?
Maybe next 1 year, there might not be a big return in these names, but post that, see if somebody has a 3-year view, then you can still make a 20-30% return from these stocks. Because in the very near term, maybe the demand, because of the AC season is now behind us. Now the next season is going to be next year, which is going to be good, hopefully, but another 2-3 quarters of lag before the number starts to come in. The same way could be for other segments. Hence, 1 year, maybe near term, not much of return from these levels, but with a 2 to 3 year, with good 30-40% return from these names is quite possible.
Okay, all right. Great, Aman. Good to see you in. Thanks a lot for joining and wishing you all the best. And maybe the second half of September, we reconnect. We get a better sense about how demand's going on ground, and we'll have some clarity with regard to GST as well. Well, let's focus on a couple of stocks. I just want to look at Zinka Logistics. The reason I'm looking at the stock is because suddenly there was a very wild move on the stock. I don't know whether we have it in our system, but it's a 11,000 crore market cap. Suddenly, had a big move on that stock. It moved close to around 7 to 8% in a matter of a few minutes out there. Went down, sub that 600 rupees odd, and then it's bounced back. So it appears there is a large trade or something to that effect that took place in those last few minutes. But I think we have Nimesh who's joining in. He's joining in from the Motilal Oswal conference. Nimesh, D Street Chatter, tell us what are you picking up and how's the conference? What's the mood like?
Well, the mood seems to be quite okay, Nigel. Again, I met a lot of investors, both domestic as well as some large FIs as well. And it seems to be, it looks like Indian markets have been kind of a, time correction going on, and looks like that may still continue for the next few months. So that's the overall sense that I picked up. But again, from a domestic fund manager's point of view, there is a lot of liquidity which is chasing equity markets. So that support seems to be there and is likely to continue. Coming to today's market, I guess, simply because we were so oversold, again, you and me keep highlighting that when a market comes to around 0.7 PCR, it tends to pull back. And that's exactly what happened in today's market as well. A good 200 points rally on the Nifty. The broader markets are also participating in today's market. A lot of individual stocks seems to be doing good today. There seems to be a bit of momentum back. But I guess from a flow perspective, it's largely the autos which is widely chased by the domestic investors, is my sense. And you've seen that reaction into the auto names as well. Of course, the auto sector benefits from the potential GST rate cut. So that's something which is playing out as far as auto is concerned. Again, broader market seems to be doing well today. As I said, a lot of individual names are buzzing 5, 6, 7, 10%. So some bit of momentum is back. I guess technically too, we need to watch out for some important levels on the upside. But clearly, given that we were so extremely oversold, a pullback was on the cards, and that's played out in today's market.
Okay, all right. What about individual names, stocks on the radar? Nimesh, what's the buzz?
Well, so the first stock on my list today is Granules. That's been buzzing in trade and actually surprising a lot of people on the upside in the last many days. The volumes have also picked up in the last few days. I understand one of the very large influential HNI investor has been buying and accumulating granules at current levels. So that explains a big move in granules and outperformance in the last many days. The second couple of stocks where there's going to be MOC buying because of the FTSE rebalancing. Two names stands out in that list, Sai Life as well as Clean Science. Both stocks of massive block deals last week or maybe in the last 10 days. And after that, there's a FTSE adjustment. So last 30 minutes, you might see a bit reaction in both the names only because of FTSE buying. Both are going to see an inflow of close to $10 million because of that FTSE. So that's a couple of stocks because of that reason. Third, a couple of stocks where I'm expecting fundraising very soon. Amber Enterprises as well as in Asahi Glass. Both have been consolidating with a positive bias of late, but expect fundraising in both those names in the days and weeks to come. And the last one is Sagility. Again, that's been consolidating in a range between 40 to 45, 46 in the last few weeks. But again, in Sagility, I understand there could be a potential large block deal coming very soon. So that's the buzz as far as Sagility is concerned.
Thank you very much for that. And the other stock that Nimesh highlighted in the morning with his standout brokerage report with Morgan Stanley on Emphasis, that stock is surging. Morgan Stanley says that Emphasis is their preferred mid-cap pick. They've raised the target price on Emphasis. They've highlighted 5 catalysts which, position the stock for a potential re-rating. But on the macro front, the rate cuts, the expected rate cuts by the Fed should also help. On that note, we will slip into a very short break. We'll come back with more on the market. Stay tuned. Welcome back. Let's get the latest trends now from the futures and options space. Nigel is at the F&O desk.
Well, the combination that has been working is the FIs are net short, the PCR goes to 0.7. That combination has worked yet again because the FIs are aggressively net short, 91% of the positions on the short side. And the PCR when we started trade today was at around 0.7. Now the PCR has moved to around 1.15, because of the kind of action that we've seen today. But that bounce was awaited, and that's precisely what we have got. But look at the options data today. And remember, this is a very, very short expiry because the NSE contract will expire tomorrow itself. And if you look at the put writing, it's aggressive. 24,500 put. Premium has crashed out there. It's down close to around 80%. 24,600 put as well. Just take a look at the open interest build up. Premium has crashed out there as well. I'll tell you what, the bears in Friday's trading session, they got very, very confident. They believe that this 24,500 mark can be held out. 24,500, 24,550. Now what you're seeing is a reverse because the bulls are fighting back, and in an uptrending market, you'd like to see a good amount of put writing. That's precisely what's happened. Moving to the call side now. Out here, there's a mix of activity because those that bought these calls, they have made a good amount of money. Case in point being the 24,650 call. Take a look at the premium. It's moved from around 27 rupees to around 47 rupees. So those call buyers, well, they are very, very happy. However, those writers, they'll be hoping the 24,700 mark actually can hold out because 24,650 call, 24,700 call, both of them massive open interest built up is what we're seeing out there. Which brings us to the levels. This 24,700 mark is the level that the bears will want to defend. However, going by the options data and going by the recent low, the 24,350 mark, that's a line in the sand. You don't want that one to break. And then you're looking at the 200 EMA, which is around 250 points away from those levels. So for the time being, the bulls will believe that they're in the game because we've seen a bit of a technical bounce, but we'll have to cross the 24,700 mark to feel better because that's where the 20 DMA comes in at. Moving to stocks in focus, there are a couple of themes that are playing out. Now, these tech-related names, well, they have been seeing a lot of shorting. Today, the tech index has moved up and these smaller players, which became shorting candidates, KPIT Technologies, big short covering bounce. Shorts are running for cover on that one. Tata Technologies, another big underperformer, has corrected big time from the top. We're seeing a short covering bounce on both those two names, while there is fresh buying being seen on the EMS theme. Whether it's Dixon Technologies, whether it's Kaynes, or even Amber Enterprises, all these stocks are up anything between 4 to around 6%, and the open interest build up on all these three names is quite large. So for today, the bulls will feel good looking at the screen, getting into the final few minutes with those sort of gains. I'll tell you what, some of those FIs as well will not be active, which has actually helped in favor of the bulls. Back to you.
Okay, all right, got that, Nigel. Thanks very much for the update. So indeed, short covering really helping some stocks bounce around in a big manner. We've got Ashish Kayal back with us. So let's quickly get some final ideas for trade. Ashish, it's indeed turning out to be a really good afternoon. Most of the gains are intact as well. Final call and any other additional stocks?
See, the additional stock can be Granules India. We talked about it on 26th August when the stock was around 460. It's up by 10% from there. But even now, there is still a lot of potential. I think the stock has another value addition of 10% from here on as well. And it has formed a very strong candle with good volumes. So one can create long positions in Granules India even at current levels, or on the dips with a stop loss of 500 and expecting a target of around 565 on the upside. And the next stock is going to be Apollo Tyres. We can clearly see the auto space is buzzing, and including the auto ancillary, the tire space. And there is a potential that Apollo Tyre can move towards the level of around 495 on the upside. One can maintain a stop loss of 454 on the downside.
Maruti, by the way, is not participating in the overall optimism surrounding auto. Maruti's share price is in the green, up about 0.5%, but the auto sales numbers for the month of August were slightly lower than street expectations. And once that was out, you saw the stock come off from the top. Ashish, thank you very much for that. Sudeep Bandopadhyay, Group Chairman, IndiTrade Capital, is now with us on the show. Sudeep, afternoon, and thank you for joining in. First, Reliance Industries. We got all the big bang announcements on FMCG, on Jio, the new AI subsidiary, Reliance Intelligence. But the stock is sulking a bit. It's not participating. I mean, what are your thoughts? Is this a good buy?
Good afternoon. Yes, first of all, it's definitely a good buy. I think these opportunities are great opportunities for accumulating Reliance. The stock is sulking predominantly because of a couple of reasons. One is because the market is assuming that this will be an IPO whereby Reliance Industries will become the holding company of the Jio platforms, the newly listed company, whereby there's a holding company discount which may creep in. I think that's one of the worry. I think the second niggling worry is also the chairman talked about global expansion of Jio platforms. Now, the expansion when you get into the global markets takes some time to stabilize. We have seen that getting played out in case of Bharti. When they went into Africa, I think it took them 5-7 years to stabilize the business. Of course, now it's a very strong, solid, sound business, which is contributing to the consolidated Bharti numbers. I'm sure Reliance Jio platforms can also achieve similar or even better results. But at least for the foreseeable future, if there is a global expansion, there may be some pain. I think market is also a bit worried about that. The third thing is probably there were no new major announcement as far as the new energy business is concerned. Of course, they talked about kind of meeting 10% of India's energy needs in 10 years and things like that, which was very, very encouraging and positive. But I think the market was expecting a bit more from the energy business, which didn't come. So there were some amount of disappointments, and that's probably taking its toll. Of course, we have to also remember the fact that today, FIIs are not present because of Labor Day holiday in US. So a little bit of lack of support from the larger counters is also visible.
The cat is away, right, Sudeep?
Yeah.
we won't get to the second part of that because all right, Sudeep, what about some of these pharma related names? How will you approach them? Today there are a couple of names like Sun Pharma. That's one of the notable losers from the word go itself. It's still sitting with a cut of around 2%. How do you approach the sector? What do you like out there?
I think I'm a little cautious, Nigel, on pharma for quite some time. I think there are too many moving parts. While I strongly believe that US will not do anything funny to affect the exports into US markets of Indian generic drugs, but you can never put things past the current incumbent at White House. So there are a lot of uncertainties there. The second thing is the competition in US market is genuine, and the pricing pressure is definitely there. The third thing is there are a lot of other challenges some of these large pharma companies are facing, which are company specific. So I've been and I will continue to remain cautious. If I have to look at pharma, I will look at domestic focused pharma companies, and Mankind has been my favorite for quite some time, and I maintain my view there. Overall healthcare space, we are very bullish on the hospital business. I think that's one segment which is booming and will continue to boom for the foreseeable futures.
Okay, all right, got that. Those are important updates coming in. It seems the IT minister has met representatives from the gaming industry today. Remember, there is a litigation already that has started in courts challenging the latest law that banned all forms of real money gaming, online or offline. More updates coming in on the screen out there. But for the time being, let's move on. Zydus Wellness has done rather well today. They were quite a small company in the UK and the market's receiving it fairly well. Manglam's here with the details. Manglam.
Well, Zydus Wellness is one of the top gainers today, and that's largely on account of an acquisition that the company has made. And more importantly, it's an acquisition that ticks all boxes. Why do I say that? Because, one, it's called Comfort Clicks. It is the first overseas acquisition that the company has made, and it's a sizable one, nearly 240 million pounds, which amounts to about 2,400 crore rupees. And it's in the business of vitamins, minerals, and the supplements segment. Remember, this market itself in the UK and Europe is close to around 11 billion pounds. And the 5-year revenue CAGR of this company has been 57%. So to put things into perspective, the last year, this business did about 1,340 crores of revenues, which is a 50% addition to Zydus Wellness's own revenues. And that has happened at better margins as well, because the adjusted operating profit of close to 21 million pounds amounts to about 15.6% as margins, and this compares with Zydus's own margins at 14%. So you have a sizable chunk, good growth and margin accretion coming in. The question is at what price? It's coming at 2 times sales and 10 times EBITDA, which is fair because the company's own valuations right now are nearly 4 times sales, and they've themselves said that this will be cash EPS accretive from year 1 itself. The biggest trigger is Comfort Click operates in geographies which are complementary to Zydus. So obviously there are revenue scale synergies for either of them. And the second part is that a large part of their revenues come in from online and D2C channels. So this opens another channel up for them as well. So all things clicked and the stock doing extremely well.
Okay, all right, Manglam, thank you very much for that. We'll take a quick break on that note. Actually, before we take a break, just one more stock that deserves mention today would be Kaynes Technologies. And Kaynes has been up almost 6-7% throughout, building on those gains throughout the course of the day. Now, in the morning, we were in conversation with the company's management, and they gave us some interesting updates about, of course, their OSAT potential. They say that they're on track to start their semiconductor shipments from the 4th quarter of the current financial year. And they're saying that they see significant revenue accretion as well. In fact, they say by FY 27-28, the revenue from the semiconductor business could be significantly higher than the estimates of 1,500 crores that they had put out earlier. So higher revenue, and they also expect substantially higher profits going into the next 5 years. And that commentary seems to have really worked well for Kaynes. Stocks holding up almost 8%. In fact, hear out what the management had to say on some of those guidance parameters, which have been looking extremely robust.
FY30, we said about $2 billion is the kind of number, and maybe about 2-digit PAT at 11%. So 11% of 18,000 crores is what we think we'll hit at the minimum. Of course, we think that it might be north of that too.
Okay, all right, that's Mr. Jairam Sampath. Sudeep, what do you think? I mean, big move on the stock today. And if you heard that commentary, does it inspire you enough to look at a buy?
Well, if I have to look at this stock, I'll have to plan long term. I think valuation isn't cheap, but I think the prospect does definitely look good over a period of 3 to 5 years time. So if I'm looking at building a portfolio for 3 to 5 years, I think Kaynes as well as Dixon can be looked at. But if you have a shorter time horizon, I think I'll be a little careful. Fundamentally, there is nothing wrong. Opportunity is huge, and they are seizing the opportunities. With what's happening in India, with the government actively encouraging consumption through multiple measures, I think they will have a good time. But as I said, valuation isn't cheap. So yes, I will be looking at long term if I'm investing in these.
All right, Sudeep, but it was, when we asked the management for that comment on net profit, last year they did around 300 crores. By FY30, they are talking about 1,800 to 2,000 crores. So currently the market capitalization is around 42,000 crores approximately. So it looks like it's trading at 100 times. But if they can achieve that 2,000 crores, then it's trading at more palatable level, of around 20 times or thereabouts. So we'll have to see whether or not they can get there. I'll tell you what, Sudeep, you stay with us for the time being. We'll slip into a short break. But as we do that, remember to tune into our all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m.
Well, it's now a 2% gain on the Midcap index, and so many stocks are, moving around with considerable strength. Delta Water, that's up close to about 13%. The market cap is just about 1,200 crore rupees, but that's got a big move. And look at the volumes, 28 lakh shares already traded. The stock has surged about 13.5%. This month it's up 41%. Zydus Wellness, we've been talking about it, and the acquisition. SPML Infrastructure, Gujarat Gas has spiked up. Prince Pipes has made a move. Lumax Autotech, Idea Forge, Manali Petro, Subros, Gabriel India. So we spoke about the frontline auto names, OEMs, but so many, so many of these ancillary names like Gabriel, etc., are also surging in trade. So it's a vibrant looking screen, and the Nifty 2 is now comfortably above 24,600. Sudeep, why don't you tell us? It's such an active mid-cap screen. Any stock that you particularly like?
Well, a whole lot of mid-cap stocks we do like. You talked about some of the auto ancillaries. We do like auto ancillary quite a bit, particularly the ones like Uno Minda. One can look at that, definitely even at current levels. Some of the cement names at current levels do look good. And definitely cement is one sector which we have been positive for quite some time now. And we believe, with the possible GST cut, which is round the corner, this will become even more attractive. All the cement companies are facing, positive demand scenario, and pricing power has come back. Cost efficiencies have significantly increased. So while the Ultratechs of the world are definitely attractive, one can look at smaller players like Birla Corp. One can look at some of the other southern-based players as well. But if I had to pick one, probably I'll go and pick up Birla Corp.
Okay, all right. Sudeep, one industry that's actually continuing to move from strength to strength is the steel businesses, right? Because you see, sometimes some slowdown in various sectors, whether it's cement, autos, etc. But for steel, now we know there is a minimum duty, so there is protection. China continues, to reduce production, and that's heartening to see. The hope is that they gradually start picking up demand and consume more of what they're producing. That's what will help the global ferrous industry. But how do you look at these sectors, when you have global uncertainty, and yet these stocks are not too far away from their 52-week highs? What do you like?
I think, Nigel, you just started by saying that we have created a very congenial atmosphere for these companies as far as domestic markets are concerned, with safeguard duty and whatnot. Of course, domestic demand is also strong with kind of infrastructure spending, which is happening all around us. So cement, as well as steel, I think these two sectors are in for good time. And, we already talked about cement. Steel is definitely doing good. And I think, if I have to pick up one, probably I'll still go and pick up Tata Steel. Considering the efficiencies and the kind of valuation comfort we have at Tata Steel. If I have to go and buy more, I will go and buy JSW as well. I think there is absolutely no problem. Overall, metals, we have been positive for some time, and we believe that metals industry will do well for the foreseeable future. Of course, there will be volatility based on global news flows and global movements. But fundamentally, if you're looking at 1 year kind of time horizon, I think both steel and metals do look good.
And thank you, Sudeep, for joining in. Just wrapping up today's trading session. And it's been a strong start to the month of September. And this week, the Nifty ending with a gain of 200 points at above 24,600. The sensex higher by 560 points, 80,370 on the ticker for the sensex, buoyed by the strong GDP data, what's happening on the geopolitical front with Modi's visit in China and meeting Vladimir Putin, plus expectations from the GST upcoming summit later this week. And even the auto sales numbers were fairly upbeat, which is why the auto index was the top star, with names like M&M, Bajaj Auto, Eicher Motors, Tata Motors, Hero MotoCorp gaining about 3 to 4% odd.
Well, that's right. From the broader markets, but there were a lot of stocks were doing a jig of their own, actually. So let's pull up a few of them. MobiWic, that was up close to around 8%. Good move out there. ABFRL, that was up close to around 8%. GMDC was up 6.5%. Swiggy was swigging it away. That was up close to around 4.5%. Ola Electric as well as Zeta, I think you mentioned those two. They as well did pretty well. On the flip side, a few stocks that didn't do too well. Z Enterprises was down in trade. Jindal Worldwide was down on very, very large volumes. Cafe Coffee Day as well was down close to around 5%. But all in all, it was a good trading session for the bulls. The bulls have been, seeing a lot of pain in terms of the broader markets as well as the Nifty. Well, today, what stood out was the Nifty made a higher high after 5 trading sessions. The breadth of the market was very, very good. Though if one had to keep a quibble about today, it would be that the Nifty Bank continues to relatively underperform. We'll wrap up with this edition of Closing Bell. You don't go anywhere. The team of Markets Forward is waiting for you on the other side.